Just changing screens. Hello everyone, and hopefully you can hear me loud and clear. And hopefully we've sorted out Anna's muffled sound. Sorry about that at the start. It's peculiar when we plug our headsets in before we start, we get problems, and when we plug them in afterward, we don't. So there we go. Sorry, such is life. Just move that out of the way. Very different trading from yesterday. Yesterday was what we call a big money day. It's the days when you have to load up, when you have a perfect storm basically in the market where you have everything in alignment and it's absolutely crystal clear whether it's a risk on day or a risk off day, and more importantly, whether there is real momentum in the market, which there was yesterday. We had a bit of a recovery late in the session, but generally speaking, throughout the session, it was pretty straightforward. It was heavily bearish, and it really didn't matter which markets you were focused on in terms of risk, whether it was risk currencies or bond yields or indices, equities, whatever. It really made no little difference. Everything was moving pretty much in the same direction. The only slight anomaly, I would say, not so much an anomaly, but a slight variation from that was that given the extent of the moves yesterday, I've just popped the YM up, that's the daily chart for the YM. Given the extent of the moves yesterday, this was a big down day. It doesn't look much, but it was pretty significant. Obviously nothing compared to this one, but you know, good enough by all means. And by the way, this volume down here is just a glitch in the system. It was just one of those things that happened. I think we had a break in, for some reason, there was a breakdown that day of something or the other from memory. So the data hasn't come through for whatever reason, but that's just a glitch in the system. It's not significant. So it was a good day down day yesterday. But the important point is that we are still trading within the volatility trigger of the daily chart for the YM. So we are still trading in this range, and until we break free from this range, then the re-establishment of the trend is going to be on hold. In terms of the technical picture, we've got pretty strong resistance overhead. This is on the accumulation distribution indicator, which has been tested several times. It's actually been tested 4 times. You may not be able to see it, but there's a little 4 there. So that's pretty strong. It's holding, it's capping off the prices. And when you combine it obviously with this candle here and the fact we're trading inside that candle still, and we've got this resistance overhead, then clearly for a move to upside, we've got to break through this. We've got to clear the upside of this candle and move up into this much lighter volume here on the volume point of control histogram, where volume is much lighter, and therefore we would expect the price to move that much more smoothly with less volume required. We've also come out of the longer term upwards trend. We're flip-flopping around here. The trend monitor's gone into darker blue. It's flip-flopping between dark red and dark blue. If we get a break to the downside, then it's a question of moving through here. We've got a potential platform of support in here. Again, pretty much the same extent. This one's tested 5 times, this one's 4 times, so a little bit thicker. And then we're going to come all the way back down to the VPOC, if that is indeed where the markets head in due course. Lots of volume under yesterday's candle. Decent amount of volume. You probably can't see it here because the price action is so narrow. But that's where we are. We're literally trading in this razor blade here. We've had a move to the downside. We've got volume coming in, flip-flopping around between the open and the close, being almost equidistant there. So that's where we are in terms of the YM. In terms of the NQ, very different picture. Still sold off pretty sharply, but a decent amount of volume under there, and actually quite a narrow spread candle, relatively narrow spread candle anyway. And what that's suggesting is that even in that sell-off, there was a substantial amount of buying. It's not quite the heaviest volume on the chart. This one caps it off by a little way, but it's certainly pretty significant. So in terms of whether we are seeing buying or selling under that candle, I would suggest it was pretty strong buying on the day, even though the extent of the move was the downside. There was quite a lot of support came in because the price action is relatively narrow. And what the Nasdaq's been doing, if you've been following certainly the blog analysis and perhaps other commentators as well, the the market, the NQ has been really leading the way, and you can see it purely from the daily chart. We're still in bullish mode down here on the trend monitor. And when you compare that against what has been going on in terms of the YM, which is trading in this candle here, and exactly the same situation over here, these two, let me just refresh that. There we go. These two indices are really at odds with what is going on in terms of the NQ. It is diverging. It's diverging very strongly. And the question you've got to ask yourself, well, is the NQ going to lead these two out of the current mire they're in at the moment, the congestion phase, and drag the whole market higher? Personally, I would say it's unlikely, purely because of the weight of sentiment in terms of the S&P 500, where you've got 500, you've got 30 over on the Dow. Certainly big companies, but less significant purely in terms of numbers. But that's where we are right now. There's a lot of uncertainty. The relationships are fragile between markets, intermarket relationships, even intermarket between the same markets, between indices, for example, you can see here. And all of it, the whole basis of trading is being driven by the global pandemic, and fundamentals are virtually insignificant now. In virtually you can take any piece of fundamental right now, and it doesn't matter whether it's unemployment, it doesn't matter whether it's interest rates, it doesn't matter housing, whatever it is, it's almost incidental. So we are in a state where the global situation drives the market. Whatever news flows through that particular channel will tend to dominate, and all economic data is secondary, no matter whether it's a red flag, an orange flag, whatever it may be. It will come along, it will react in the market, and then the market will just pass on and almost ignore it. And that is true of pretty much all the fundamental news right now. So the question you've got to ask yourself is, well, if I'm going to trade this, yesterday was, as I say, was pretty straightforward. Today is very, very different, almost like chalk and cheese. And if you're going to trade today, then you've got to move down to the faster time frames. So you either go down to the tick charts, you go to Renko. Let's go to the Renko. This is what's happening at the moment. We had a decent run up here. That was on the ES. That's starting to come off a little bit. That was also reflected over on the YM. This is on 15-second, by the way. This is on a 15-second Renko. This is on a 15-second Renko, as indeed is this one. So we've got the YM, the NQ, and the ES. And below, I've got the equivalent time frame charts. So one can look at it in terms of applying volume price analysis from below, where you're looking at volume and price. And then you're trading off the much faster time frames of a Renko. And you can change these to whatever. I just simply have them on 15-second. Let's just refresh them. Just click on this, click on the time frame, which is matching the time chart below. And just click on that, and that will then load up. And that'll give us a 10 brick. So this changes throughout the session, as you would expect. So each of these bricks on the YM is now worth 10 points. Now bear in mind that on a small size contract, the mini Dow, these are all worth $50 because the point is worth $5. If you're on a big Dow or trading multiples, the big Dow is 25. You might be trading multiples. So when you look at these bricks, you think, well, that's not worth very much, but you multiply it by each of those points by $5, and it adds up. So in terms of the NQ, it's in ticks, as is the ES. So if I just refresh these, just drop down onto the 15-second again. Let's wait for that to settle. Just click on that. Okay, so now we're trading on this. We're trading 15 ticks. And let's just see what the ES is. Update that one as well. Okay, and that's on 5. So that's moving much quicker than the NQ. There we go. So in terms of just a straight comparison in looking across these three indices and which one you're more comfortable with and which one is going to develop a trend, albeit this is pretty fast trading, because if the price action is narrow and you want to trade and you feel you have to trade, then you're going to have to step down to these faster time frames. You cannot trade a slower time frame in congestion. The only way to do it is to step down into these sub 1 minute time frames where you are literally in and out every few seconds. You're grabbing pips, you're grabbing points, whatever it may be, You can't trade these markets in any other way. It's just a fact of life. Short and simple, that's it. If you're uncomfortable trading these time frames, then you just don't trade them. You either sit it out and wait for a day when there's momentum in the market or when we've got a break away from congestion, or alternatively, you just wait for, you just move to slower time frames where you're trading hours, days, whatever it may be. And just to really put this in context, this is where we are on the 15 second. We've had the volatility trigger to the downside, ton of volume coming in. We're still trading around the volume point of control here. We've got this very strong level of resistance building overhead, which has been tested 9 times now. So that is extremely strong. So if the market breaks through there with decent volume, then we've got a half chance of grabbing some points on the way up. And that's really what you'd be waiting for right now to get in. You'd be looking at this, okay, you'd be checking on the volume, see where we're going. And that really is your mark, because once you're through there, you've then got some decent protection underneath you in terms of any reversal against you. If you jump in long, at least you've got something to hold the market up if it does go back and retest that region. But you've got to wait and be patient. Doesn't show any signs of it at the moment. See where we are on the NQ, pretty similar picture, trading around the volume point of control. We've got another decent level up here, 15, 16 points above us. So again, we've got to wait and be patient. There's nothing particularly in terms of the volume that's giving us any clues. We've had volatility. We're trading inside the range of that particular volatile candle. You've also got a pretty decent platform of support building here as well, this blue level. That is building into something nice. You can see that's been tested again. So that's a decent area that's in place. So you've really, this is it's just an example of how these channels build around the volume point of control into a congestion phase. So you've got your central fulcrum, if you will, which is your yellow, the fulcrum of the market. It's the seesaw, where you've got 2 people of equal weight on either side, and that's where the market is. The price is in agreement, to use the market profile terminology. So price is in agreement. We're trading in that range. There's no strong sentiment one way or the other to drive this market hard, and you just have to be patient. But what it does do in developing a congestion region, you do start to get these levels building which identify the channel of interest, if you would like to call it that. And you then decide at what point should these levels be breached and on what sort of volume that you may consider jumping in and taking a position in the market. Let's just see where we are. Let's just move back over here because that's where we were. Okay, so we've now broken through this level. Just move that up a bit, make the volume a little bit taller. So we've broken through that level. Question you've got to ask yourself now, is that good enough for me? Do I want to jump in? Am I comfortable jumping in? You've got low volume to the upside. The volume here wasn't huge, but then remember, it's being distorted by the volume over here. So if we're jumping in on this one, we're going to grab some points here to the upside. We've got a little low volume node here, so hopefully between 405 and 410 move through there fairly quickly. So that's sort of 5 points, which should be relatively straightforward as a grab. And then we've got a little bit of high volume coming in here, but nothing significant. And then it's off to the upside up to 420. It's a question of whether you're going to stay in that long, given these markets are extremely volatile, no great momentum behind them. And as I say at the start, it's really just a question of snicking pips from the range, just getting in there, grabbing something. Here we are on the Renko, ticking its way up. And what you're looking for in combination with this is to have the other 2 indices up to try to help to give you an alternative view. You'll get a view on obviously the chart structure from here. You'll get a view on what the Renkos are doing on the associated indices. Generally speaking, they should all be moving in the same direction, but not always. Let's just wait and see how this develops. Let's pop up the time chart again. Now we've got a little bit of resistance building here. We had a pivot to the upside, so it looks a little bit weak. Nevertheless, this is a minor level of resistance, but it could build into something stronger. Trend monitor, you can see, is helping to keep you in. We had the even if you came up from this lower level and weren't waiting for a breakthrough here, you've got this transitional phase. Now we're back out into blue again. So we never went red here. We stayed firmly in bullish territory. Now we're pushing higher again. but we're not going to hang around here. You know, this is not, we're not going to stay in here for 10, 15, 20 minutes, you know. It's just get in. Okay, we're up to 20 now. You know, we might have 10 or 15 points in the bag by now, which is $70, $80 at $5.5 a point, which is handy. You know, now we're taking off. We can still sit in here. Nice development on Renko. The NQ is not following. You know, it's what's interesting is the ES is rising nicely, but the NQ is a little bit sluggish, starting to pick up now. Starts to see the volume pick up here. You can see that that gentle rise in volume. What's also interesting down the bottom here, I've got the tick speedometer, which is it gives you an instant view on the tick activity, whether it's high, medium, or low. We actually use this to generate the tick requirements or the tick data, the actual tick for our tick charts when we're on tick charts. So it's there, just below there. But it also gives us, used in this way, attached to the time frame chart, gives us a heads up on the activity. And this is what I meant. You've got to be light on your feet in these markets. You know, we're not hanging around in here. 20 points, 20 up here, you know, 10 points up here is perfectly fine. In and out, just bag it, tag it, that's it. Off to the next one. Just wait to see what happens. Pretty low volume to the downside here, but then the tick activity has dropped away as well. And on we go. Might take a, you know, might take a short. Might decide, okay, you know, had enough of the, have done on the long side. Looks as though it's going to roll for a bit. You know, those are the decisions you take, but it's all done with speed. This is not, you're not sitting in here for minutes. As I say, this is jump in. This is guerrilla tactics. Jump in, get out. Now we could jump back in again. We've got decent volume on that particular candle, you know, and jump into the next one. Grab a few more points and get out again. It's as simple as that. I'm just going to pause there for a moment.